You've decided you're retiring early, before 65. And then it hits you. Medicare doesn't start until 65. So what do you do about health insurance in the years in between? This is the gap that stops people from retiring even when the money works. Let's close it. Here's why it feels scary. For a few years, you're on your own for coverage. No employer splitting the bill. For early retirees, health insurance is often the single biggest line in the whole budget. But biggest doesn't mean unsolvable. It just means it's worth getting right. When you leave a job, you really have two main paths. The first is COBRA. The second is the marketplace. Most people grab the one they've already heard of, and it's usually the wrong one. COBRA lets you keep your exact work plan. Same doctors, same network, nothing changes. The catch? You now pay the full price your employer used to share. It's a bridge, not a home. It usually lasts about 18 months. Wonderful for a short gap. Expensive for a long one. The other door is the health insurance marketplace, the plans you buy on your own. And in 2026, something big changed here. Through 2025, extra help held premiums down for almost everyone. That help expired. So the old 400% income cliff is back. Stay under a certain income line for one person, right around $60,000, and you can get real help paying the premium. Go $1 over and you can lose all of it at once. That's not a gentle slope, it's a wall. Now here's the good news, and it's the real secret of early retiree coverage. You often have a say in your taxable income, which accounts you draw from when you start Social Security. Whether you do a Roth conversion this year, you're the one with your hands on the controls. Steer your income under that line, and the help is yours. Which means your health coverage and your tax plan were never two separate problems. They're one. The year you retire, the income choices you make can quietly decide your insurance bill for the entire year. So don't guess this number. And please don't let a scary headline talk you out of a retirement you've earned. Price it. Run your real situation. COBRA versus a marketplace plan at your actual income. The gap is almost always smaller than the fear. Plan for it like any other line in the budget. Give yourself a small cushion for the deductible, and the gap years stop being a wall. They're just a bridge, one you've already built. Retiring before 65 isn't reckless. It's a plan with one extra step. Handle the health insurance gap on purpose, and the door to early retirement swings wide open. If you want the whole playbook, every option, the income moves, and a year-by-year timeline to your 65th birthday, it's all in the guide linked below.